17.2 million homes foreclosing in the next 6 to 12 months. The end is near. Real estate disaster. A price crash worse than 2006. The Fed is crashing the housing market. How bad will the housing crash get? These crazy headlines are all you'll see right now. They get the most clicks, they get the most views, they end up in your social feeds no matter what platform you're looking at. In this video, I'm going to talk about what you should truly expect in 2023. Is it as bad as they say it's going to be, or is it as good as some of the rose-colored glasses real estate agents and mortgage folks might lead you to believe? Let's talk about it in this video coming next. All right, Matt the Mortgage Guy, residential mortgage broker. I help people across the country buy and refinance homes, anything from 1 unit to 4 units. That's our lane. If you want to get connected with us, go to greatmortgagebroker.com, fill out the form, let us know where you're at. Okay, before I jump into this video and kind of talk about all the things that are being said, why 17.2 million foreclosures is the most ludicrous thing I've ever heard. And it's a guy with a lot of followers on TikTok. And then he got it from a real estate agent. It's truly ludicrous. And I'll share with you some real foreclosure numbers from some real data firms that actually look at the true data, not just foreclosures, but pre-foreclosures, 30-day late, 60-day lates, so we can see what's coming in the future. But before I do, we always got to start with a housing joke. So guy walks into a bar, orders a bottle of champagne. Congratulations to me. I just made my last mortgage payment. People come over, congrats on your last mortgage payment, free and clear, it feels great. And he goes, well, I still owe $273,000. I just can't pay it anymore. Seems like a fitting one if we're going to talk about foreclosures, and not to poke fun at that. But the good news for people is like people are foreclosing at literally historically low rates, right? Black Knight data, and I'll share some of this down below and links to their monthly reports that come out, track this stuff, right? They track how many people are delinquent, how many pre-sale inventory, like total in US, right? Like how much of that of total inventory is like a foreclosure pre-sale, right? It's going into foreclosure. Total US foreclosure stats, monthly prepayment rate, for foreclosure sales, right, as a percentage of everything. And the numbers look really good for homeowners, as you would expect, right? Depending on what market you're in, between January of 2020, when like a lot of these states, when I'm looking at the stats, saw historically low foreclosure rates in January of 20, a decade of strict underwriting guidelines, a decade of growth, a decade of a really strong and great housing market is what puts you in a position, January of 2020, where there's historically low foreclosure rates. And then guess what happens for 2 years after that? Most markets saw 25, 30, 40% price growth. So to tell me that 17.2 million people are going to foreclose, you must be out your goddamn mind. Or you must think I'm out my mind for me to believe that stuff. I saw a lot of people debunking it, but the thing about this type of shock and awe and fear porn that's out there, you guys keep clicking it, you guys keep watching it, and so it gets more traction, right? This TikTok is going to get millions of views, and people are going to regurgitate that crap. 17.2 million foreclosures. I would bet both pinky fingers. I'd cut them off right here, and I would eat them on YouTube Live if in the next 12 months we saw anywhere near 17 million foreclosures. It's just such a ridiculous number that it shouldn't even be considered. Number of properties, and this is as of Black Knight's latest report that showed September of 2022 data, right? Number of properties, US, across the whole country, that are 30 days or more past due, but not in foreclosure. 1.491 million, right? Number of properties that are 90 or more days past due, but not in foreclosure. 558,000. Number of properties in foreclosure pre-sale, 185,000. So as you can see, like there's nowhere near tens of millions, 17 millions. It's a ludicrous number to think about, right? When you look at some of these stats too, the interesting part is like month over month, things aren't increasing. When you look at total US foreclosure starts in September, this was 18,400. If you want to be a fear porn type of guy, go ahead and show everybody that that's up 370% year over year. 370% because in 2021, we were still within this you can't foreclose range, right? Like it's only been 9 months since things have expired and you can actually foreclose. So of course they're up 371%. Month over month, August to September, they're down 9.3% foreclosures, right? I don't want to spend all my time on this foreclosure stuff, but I do think that it deserves some attention to offset all the crazy numbers that are being thrown about for the tens of millions of foreclosures that's going to bring this wave of inventory. It's going to cause the housing market to crash 20, 30, 40, 60, 80%, right? Not going to happen. And in order for the housing market to have substantial downturn, 40, 50, 60, like these people are talking about, you have to have a lot of inventory. That's where everything I read from trusted sources, from people that are actually looking at the data, will point to, yes, we might see 5 to 10% price reduction. I know how unaffordable things are. I know how much it hurts people with a 7% interest rate. I get it, right? Demand is pulled down a ton because of the cost to borrow. With limited inventory, we're going to see some price reductions, but the only way to see the huge crash is to have tons of stuff hit the market all at once. Foreclosures won't do it. People sitting in 3% mortgage rates, they're sure as heck not going to sell their house and not incentivized to do so. So I just don't know where it's happening. Another thing, and this is really, really interesting. Chew on this because I read this the other day and I was like, man, that's something I didn't think about. All this money printing we did, right? There's a thing called the paradox of value. And it's got other names, diamond water paradox, that talks about like this relationship with scarcity, right? Although water is a lot more useful, you can do a lot of things. People need it to survive. Diamonds command a higher price because there's a lot more water than there is diamonds, right? So an investment banker had an interview with Barron's, and he talked about like the current housing market is akin to the paradox of value. And I'll explain it. So like if I can understand it, hopefully you can understand it, right? If you have the same quality of a real asset, like houses, like housing, and many more dollars, print like crazy, home prices rise because the dollars are worth less and a house commands more dollars. My simple brain thinks of it like burgers went up to $12 or $13 because we printed all this money. It inflated the cost of goods. It inflated the cost of labor. It inflated a lot of stuff. To think that we're just going to reset to $6 burgers at some of these restaurants because it's more comfortable for people and it's more affordable isn't reality. There's more dollars. The dollars are worth less, and therefore you've got to pay more for the goods or the real asset like houses, right? So housing is a real asset. And according to this, Michael Ashton, who talked about this, a drop in M2, which is a gauge of the money supply, like cash deposits, shares in retail money, mutual funds, would be required before a crash could happen, right? And for somebody like me who watches the Fed and monetary policy, like this would be a tightening of monetary policy, taking money out of the system. So that M2 money supply is still really close to record highs. It hasn't been growing as much, like year over year. I think in October, it showed a 1.7% increase. Like the year prior, it was like a 13% increase. As you would expect, they're printing money, right? So if you're a monetary theorist, right, and somebody's saying that home prices are going to decline by 20%, like price and quantity are equal to money supply times the velocity, or like the pace at which money is spent, it doesn't compute, right? The 20% drop that people talk about in housing would necessitate a 20% decrease in the money supply, all other things being equal. That's why this guy, Michael Ashton, was like, ain't going to happen, right? Whether you believe that or not, whether that's just like, I don't know, crazy talk to you, it's something to consider, right? That housing prices are high, mortgage rates are expensive. I think it should be lower. People can't afford as much. Therefore, we're going to go down by 50%. It's not necessarily how it works, right? So quickly, because I don't want this video to be an hour long, how much is the housing market going to decrease? That's the $1 million question, because I'm going to sit here and I'm going to sit right in the middle. It's not all sunshine and rainbows. We won't continue to see home price appreciation for the next 6, 12, 24 months, most likely. We're also not going to see a 40 to 50% crash. So who can we look to? Who can we rely upon? Who can we trust to have an accurate housing forecast? And then finally, I'll end the video with what I think you should be doing today in today's market, right? So peak to trough, highest of highs to lowest of lows, Moody's expects home prices to fall between 5 and 10%, right? They say, and I think this is valid, overvalued. The markets that were the hottest might see a drop between 10 and 15%. Fair, reasonable. I tend to think that that's probably going to be pretty accurate, right? Fitch Ratings, it's a credit rating agency, said that, you know, severe housing downturn is not yet probable, but, you know, they, similar to a lot of others, moderate pullback, mid-single digit decline in 2023, and flattening or more the same in 2024. So like, you know, when you say mid-single digit decline, that's 5-6%, right? Capital economists say that home prices will fall by 8%. Zillow, we don't want to listen to them. They're never right. They've never been right. And so it doesn't surprise me that they're forecasting 1.2% home growth August of 22 to August of 23, and then 2.4% home growth the year after. No. Fannie Mae home price growth will be moderate, right? So, I mean, I guess CoreLogic and Fannie Mae and Zillow are all like, it's going to be flat to up a little bit. I don't even know if I'm that rosy on the housing market, but here's what I'm going to end with. And here's what I think you do in this current market. Something's listed for 450,000 and you're like, home prices might go down 5 or 10%. And I don't really want to buy something for 450 that might be worth 405 next December. Okay, I can't blame you. You can do what my investor clients are doing. Go out there and write next winter's number. Go out there and submit at 405. Write it at 415 with 10,000 in credit and structure it in a way where it's going to be a really good looking mortgage because you got that 10K in credit to buy down the rate, or do a 2-1 buy down, or one of these things, right? But don't sit still. Don't pause and be done with it, because there is some risk, I believe, in waiting if the Fed policy changes, if CPI on November 12th comes in lower than expected, if inflation starts to come down, if the powers that be start to realize that 39% of that CPI number attached to housing isn't as inflated as their year-over-year readings. Simpler way of putting that is when you tell me that year-over-year home price appreciation is 13%, that number shouldn't be accounted anywhere. Right now, current housing market, flat, not 13% upswing. Yet it goes into this number and shows inflation higher than it truly is, right? So if these things happen, and they should, and inflation comes down and interest rates come down, and we get to my magic number, which is 5.5%. At 5.5% rates, people are in a better position financially. They're more bullish on housing. They're filling out greatmortgagebroker.com and connecting with me and my team at a higher rate. This higher demand will create a floor and could create upward pressure on home prices. So if you wait, instead of writing 405 today, you let the market stay flat, and then more demand comes when rates go lower, you could be in a position where that house is 435 and you're a year behind on principal pay down. You're a year behind on a bunch of different things. I understand that the rates are higher today, but when that 5.5% comes, or 5.25% or 4.99, nothing is stopping you. If you qualify today, you most likely qualify tomorrow. Refinance. Or you might set something up today with some seller credits that puts you in a great mortgage from day one. Either way, investors are out there buying. People are greedy right now, while many are fearful. Part of the reason they're fearful is they're watching all this fear porn. So it's your choice. Watch that, stay still, and don't act. Or go out there, know what you're looking for, write great offers, and buy some real estate that over time appreciates. I'm not going to think that I can predict what's going to happen in 3 or 6 months, but I can tell you with 100% certainty, over the next 2 decades, millions of people will gain millions in equity, and there'll be multi-millionaires made, generational wealth made on real estate. If you want on the train, there's room. If you just want to watch it go by and wave because it seems scary and fast, all good. Connecting with my team's easy. Greatmortgagebroker.com. Fill out the form. Let us know where you're at and how we can help. If you're looking to connect with a real estate agent anywhere across the country, homeandmoney.com/Matt. Hopefully this was helpful. Until next time, we gonna see.